7. It's a lucky number, right? 7 colors in a rainbow, 7 seas to sail, even 7 wonders of the world. But in 2023, 7 has lost its charm. Why? Well, because a 7% mortgage rate is no one's lucky charm. Today, we are diving into the turbulent seas of the rising mortgage rates and charting a course towards better mortgage deals. Are you ready for the voyage? Let's go. If you haven't heard the headlines, no worries. That's what I'm here for. I'm here to bring this information to you. And not only am I here to bring the information to you, I'm here to help you figure out how to navigate so that you can get the best deal that's out there. Let's just cut to the chase. Mortgage rates have gone up. We've seen mortgage rates going up 14 basis points. Now, what this means to you, the easiest way for me to explain this is if something were to cost you $1 today, and it were to go up 14 basis points tomorrow it would cost you $1.14, okay? So that's the easiest way for me to describe it. But keep in mind, when you're dealing with mortgages, you're not dealing with $1. You're dealing with hundreds of thousands of dollars. And that 14 cents over hundreds of thousands of dollars can be astronomical. But right now, we are seeing interest rates into the 7s. Per CNBC, the 30-year average rate is 7.22% for a 30-year fixed mortgage. And of course, this increase of 14 basis points comes out right after a very strong ADP jobs report. Now, over the last 6 months, mortgage applications, it's pretty much been a roller coaster ride. They've been up, they've been down, but over the last 3 weeks, they were actually pretty consistent, and we were seeing mortgage applications on a rise, meaning that more buyers were showing interest in buying homes, even with some of these turbulent interest rates. But over the last week, we've seen a decline in about 5% of mortgage applications, which there could be several different reasons for that, but that decline was before we saw this increase in mortgage rates. So who knows what we're going to see over the next few weeks, but one would assume that we'll probably see or continue to see a dip in mortgage applications over the next few weeks and possibly over the next few months. To add some additional context, if you were to compare the mortgage applications taken out over the last week and compare that to the same week in 2022, we're actually down 22% in mortgage applications. So it's a pretty staggering number overall. But again, we'll see what happens over the next few weeks and months. Now, we also saw the average mortgage amount drop to the lowest it's been since January of this year. Right now, we're seeing the average 30-year fixed mortgage. The average is about $423,500. And again, that is the lowest that we've seen since January of this year. Now, if we were to kind of unpack some of these numbers to help make sense of all of that, well, that mortgage, $423,500, the payment on that mortgage at 7.22% is about $2,900. The exact dollar amount is $2,882. But if you were able to get that same mortgage amount or that same interest rate down from 7.22 to 6 3/4, roughly 0.5% difference, your mortgage payment would drop by more than $100 on a monthly basis. As a matter of fact, your mortgage payment would be $2,745, which is a difference of $137 on a monthly basis or $1,044 on a yearly basis. But here's the kicker. If you don't refinance and you keep that loan for 30 years, it's almost $50,000 more over the course of 30 years by just that difference in interest. So again, it's a pretty significant difference over the course of the loan. Now, how do you protect yourself? How do you get the best deal? Right now, as I mentioned, mortgage applications are down, meaning mortgage loan officers are scrambling for business. They need to earn your business. So right now, it's more important than ever for you to shop your loan around. As a consumer, you're allowed to shop for at least 3 mortgage applications. Now, there is some things to know about that. You can't wait too long to put all of those applications in. That's a whole nother video. But again, you're allowed to get 3 different opinions or 3 different loan approvals with impacting your credit really only once, okay? But moral of the story, you want to shop your loan around right now, okay? And here's the thing, when a loan officer offers you a rate that appears to be too good to be true, make sure that you're clarifying or asking them to clarify any discount points that they're charging you to get that more attractive rate. Discount points are things that a lender will charge you up front. Sometimes I don't want to say they disguise them because that makes it sound predatory and unethical, but it's a way for them to give you on the surface a more attractive rate, but it's going to cost you more at the settlement table. Definitely investigate the charges or points that are affiliated with the loan. Shop the loan around. Right now, there's a lot of good loans out there. There's a lot of different grants. Make sure that you're also considering your local branches. Credit unions are phenomenal when it comes to offering services to their members. And again, some of the local branches that also underwrite their own portfolios might be able to offer you some really good options. So it's wild out there. Who knows what we're going to see over the next few months. But again, if you have any questions about the real estate market, don't hesitate to reach out. As usual, there's a free buyer's guide for you to download in the description, as well as a link for you to carve out a free 15-minute consultation with me, which I'd love to do if it means it's going to help you get in a home. So with all of that said, my friends, stay cool. It's definitely hot out here, and I'll see you soon.